This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between GordonTLong, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm GordonTLong with GordonTLong.com, and I have with me again this morning Ty Andros. No stranger to many of our listeners. Ty is the president of TraderView, publisher of the TEDBit website, writer and editor of his well-recognized Austrian newsletter, also named TEDBits. Welcome back, Ty. Unfortunately, this is going to be our final session for this month.
Thank you for having me, and of course, I'll always look forward to doing this with you on a regular basis.
Well, we've got a pretty good roadmap going forward. This morning, Ty, I really want to tie together these first two shows of growth. Before I do, though, I need to just quickly take care of some mechanics. We have slides to guide our conversation again this morning. Ty's brought some great slides. I would ask our listeners to open the slides to full screen viewing. You need to do this so that you can properly see them, whether you're using SlideShare or whether you're on YouTube, which we're currently distributing on now. Both work the same way. There's an icon in the bottom right-hand corner that allow this. Also, in both medias, we have the ability to add comments and questions, which Ty and I are really open to getting from all of our listeners, feedback or questions, so that we can continue to improve the show, and also to make sure that the things we're going to talk about in the future are the kinds of things or concerns that you have that you'd like us to address. Ty, the first chart I have up here this morning is in actual fact the table you finished off with in the last session, where we drawn the conclusion that GDP was closer at best to 10.6 trillion, not 15.5 trillion as reported.
Really what we've shown is how government has to mask the consequences of their poor policies, and how their poor policies have been murdering the ability of the developed world to produce more than it consumes and create wealth for their constituents and the ability to grow jobs and economic activity in the future. And as you well know, Gord, it doesn't matter where we look, but we've got hardcore socialists in power throughout the West, and socialism is the policies of insolvency. It's legislating more benefits than you have to pay for. It's conjuring the ability to pay a benefit out of thin air and not, and pay for it in, I'm going to call it debased dollars, because it's why we have the runaway debt, which we're going to be illustrating here. But the conclusions from the first section were based upon imputations. The economy is actually 16% lower than is being advertised. And then if you back out the other lies, which principally come from misstatement of inflation and government deficits counted as production, that the economy is literally only two-thirds the size of what's being advertised in real terms, real money.
Ty, I need to stress that that's the best case, because we didn't take out substitution, hedonics. We didn't start to do any adjustments for whether certain levels of consumption should be credited as growth, etc., that we covered off in our first show. So even giving the government every benefit of the doubt, the best we can come up with, it's got to be a maximum of 10.6 trillion.
That's when you think that government spending is $3.5 trillion. You have to understand that there's nothing. Well, first of all, people say that the government revenues are 19% of GDP, but if you use these numbers, government spending is 35 or 36% of GDP, and of course that doesn't include state and municipal spending. So just like Europe, now the United States has climbed into an area where government is 50 to 60% of the economy, in the spending, which, is just killing things. It's, there is no hope for growth in the United States or in Europe, and the policies necessary. One of the things that Keynesians don't look at, they just look at the supply of money and demand. It's not.
What the numbers have led to is clearly there's distortions in decision making and in flawed conclusions from it, and the distortions. And this is what you're, I think, really saying here, is it leads to distortions in how much debt we can cover if you've changed the GDP. It's just like a homeowner. If you've got a certain income, you think you can afford certain things, so therefore you take on certain amounts of debt. And the total amount of debt that you think you can handle is also different. So the deficits that we currently, ourselves in Europe, et cetera, and I know you've got a great chart here on Europe, gets distorted because of the denominator. I think your debt levels, total sovereign debt, get distorted, and then your total debt, which is government and households and private sector, get all distorted and way out of whack. And so when we're talking about these levels being too high, what happens when we just change that denominator by the degree that we're talking? It's dramatic. And then, of course, we get all these flawed policy decisions. We get flawed policy decisions, the reality of the bailouts, the funding, the solvencies. We get the ability to deliver on unfunded liabilities and entitlements. We're lying to ourselves because we won't have possibly the growth that's there. You get stagnation because as we talked about in one of the shows, the private sector, the small businessman doesn't believe the growth. Their disbelief. There's a lack of confidence. And then, as you pointed out a number of times, you get malinvestment from bad pricing, mispricing of a product. All of these things. And as you said many times, the public policy makers, therefore, are forced to lie to us. They have almost no choice. They get locked in. Is that fair?
Like we've said in the previous episodes, the lies just keep getting bigger and bigger, and so they've got to pile onto the policies because if they can't maintain the illusions, they can't maintain the support. And the illusions have now grown to so huge that they just have to keep building upon them, and of course it's all going to come apart in a bang. But you just need to look at this chart that we've got here where we're showing the actual debt to GDP ratios, getting rid of, I'll call it a number of distortions that are used to hide the true amount of debt or obligations that the Europeans and the United States have made. I mean, just to give you an example, think of somebody that has $2,000 a year of income. They owe $14,000 of debt, so they owe 1, 2, 3, 4, 5, 6, 7 times more debt than they have income. And if they have off-balance sheet hidden liabilities, that they actually have liabilities of $100,000 to $200,000, depending on whose numbers you take. And the debt of that person is called risk-free and the safest security in the world. And of course, I just gave you a description of the United States government. And of course, they've made promises to pay, and but they're empty promises because they've made promise to pay in little worthless pieces of paper that they print out of thin air. And ever since King Solomon, we've tried to have alchemists trying to turn lead into gold, spin hay into gold, Rumpelstiltskin. Well, modern politicians have figured that one out. And what they've done is they've created fiat currency, and that fiat currency can be printed endlessly, and as long as people are not taught what real money is, that can go on a long time until the illusions are falling away. And of course, the illusions are falling away every time you go to the grocery store, every time you go anywhere. And taking out nominal funding and inflation, people's standards of living are falling away at 9, 10, 12, 13% compounded annually. And you just need to look at your own bills. I actually have been very fortunate in life, and fairly successful because I've specialized in helping people meet the challenges being presented today. But I can't figure out how someone making $50,000 or $60,000 a year can make ends meet or have any kind of a quality of life. Whether it be health insurance running away, or the price of food and shelter, or anything, the components of life. The middle class has been just completely destroyed. They've lost 90% of the value of their income. And even if they are able to produce more than they consume and put it in the bank, it's constantly being stolen by a printing press. And of course, and when they steal it with the printing press, they're calling it economic growth. Okay, it's incredible that we're just living in the land of George Orwell. And Gord, I'd like to move on to the next chart, because we can look at Europe and these actual debt to GDP ratios, but the economic activity. I promise you that Europe's doing the same imputations and masking inflation just like the United States is. And what you see here is no growth, but if you actually added those imputations and the misstatement of inflation, those economies are imploding at 14% a year. And of course that's why there's rioting. And of course the rioting is far from over. It's only beginning. And either they, unwind their socialism, or create, the incentive to produce and work on human behavior to create people that want to get up in the morning and produce more than they consume, but on top of that, provide people more goods and services for less money, a fiat currency is a promise to pay. And a promise to pay, the person who's making the promise to pay has got to produce more than they consume in order to make those IOUs believable. But of course, they're not believable in the West anymore. They're not believable. That's why, I've talked about it before. Currencies don't float. They just sink at different rates. And that is them defaulting on their promises to pay. And of course, it's accelerating just because they've made impossible promises. They think they can preserve the welfare state. They have huge amounts of government dependence. And those government dependents have accepted those promises to pay. And now they're getting, an NSF. The money printing is just going to accelerate. Growth is going to continue to rotate to places where you can actually do it, which is, growth is really outlawed in the West, isn't it, Gord?
Well, it's certainly misrepresented. And it is outlawed in our regulatories and the legislation that is stopping and impeding the growth, and certainly in the United States and in most of the developed countries. And it's forced, Ty, because of that example of that chart you had up previously on Europe. When you have misstated GDP, then you think you can take on more debt. And when you start to get more debt than you even understood that you had, and that's why you and I put this chart together here out of work that Mark Grant did, that said these red numbers of the European debt to GDP is not what they're reporting. It's up at 140%. That's only kept that low if you believe their GDP numbers. And then look at the debt that's down below it. That's not even included in that in a massive amount of contingent liability. So to do that and then to have the taxation to cover up the misrepresentation, you in fact achieve just exactly what you said, Ty. You legislate out the ability to grow. You legislate out the ability to expand. And we were talking about that in previous shows of small business in America, how it's actually down dramatically in the number of people that are starting new businesses. This is what grows new ideas.
Well, just think of the human behavior and the incentives to produce here. Either it's outlawed, they've regulated people into crony capitalist, being consumers of crony capitalism products. And of course you can say, everything you want about global warming. But when you legislate that people have to buy electricity that came from wind power, which costs $20 a kilowatt hour, versus them buying coal-fired electricity, which is $1.50 a kilowatt hour, what you're doing is you're legislating poverty. And of course, that's what's emerging.
These lies, I think it's the right word. And I'm very hesitant in wanting to accuse anybody of lying, but that's the stage that we've now, it's so blatant. An example is this slide that we have right now. We call a recession is where you have two negative back-to-back quarters of the GDP growth. Well, it is ridiculous. We've never got out of a recession. Matter of fact, we're in a depression, and we've talked about what the actual GDP numbers are, and we're contracting globally. And matter of fact, we've been watching the PMI numbers that you and I have been talking about for quite some time coming out around the world, just absolutely proving it. So now they're trying to figure out, well, how do I match up the PMI with the GDP and still show growth? The developed world is in a depression. Now we'll start arguing about what a depression is. Well, when you're unemployed, if you're part of the 47% of the youth in Europe that can't find jobs and are in Spain are being suggested that they leave the country, no less, Ty, and find work in other places, you cannot not call that a depression. Unless you're a politician.
The whole West has said, Western governments have said they rescued us from a depression. They didn't rescue us from a depression. They just created illusions to cover it up.
Ty, you make a really good point that a lot of this is developed world. We go to other parts of the world. I have up this chart here from China, and whether you agree with their GDP number and our GDP number, what you and I can emphatically agree with is there is a difference, okay? The rate of the difference. One is creating wealth and one is not creating wealth. And one is misrepresenting growth, and maybe they're both misrepresenting growth, but I know one is creating wealth and one is not. And when you go, and here's a way I represent it, Ty, of looking at current account balances, which is real money, not real money, which is money transferring. You can see on the top those who are on the positive side who are producing and creating wealth, and you can see on the bottom side the developed countries. This is IMF's reports. These aren't mine, showing who's consuming and spending wealth. Of course, we don't report it that way. And I know, Ty, you got some great examples firsthand in China from your relatives.
Well, let me just say this, that my wife's Chinese. She's mainland Chinese. I have had discussions with her parents. Their income since 1990 is up maybe 500 or 600%. When I go into their home, it really reminds me of the United States in 1965. Whether it be modern conveniences and microwaves, and as wealth increases, the standard of living increases. They demand cleaner water, but I don't recommend anybody invest in China, just because when it comes in, they've developed manners of really taking the upside away and keeping it themselves. But I don't believe China is anywhere near collapse, although some people would say that it is. Just because they produce more than they consume. And they don't have any kind of a social safety net. It doesn't matter whether you make $2 a day or $2,000 a day, you don't spend that. The savings rates in China are 30 and 40%, and it's because they don't believe in government. They know that if something bad goes wrong, they've got to take care of it themselves. And so they're very sturdy, very self-reliant. They're just, migrating to the cities. It's a miracle that hundreds of millions of people are coming out of subsistence poverty and rising into a middle class. And when you're waging, people like to, it's really ironic in that we've got developed world socialists trying to, dictate and stop capitalism in the developing world. I mean, it's just, the hats have changed. And we've got, the way a socialist works is they try to export their poor policies to their competitors. And of course, that's what's going on now. Whether it be in Europe, Brussels actually, whether it be a transaction tax or whatever they may do, global climate change, they're trying to export their inability to compete onto the people they have to compete with. And, as much as socialists hate Darwin, there are truths that you have to produce more than you consume. and survival of the fittest. And it's just a law of nature. It's been a law of nature, and it's unrepealable by a socialist. They can't repeal it with the law. And, of course, they're working as hard as they can to do so. And when they do it, all it does is impede their own personal ability to grow. And so we've got, the wealth of the world is rotating. It's going to continue to rotate. It doesn't matter whether it's India or Russia or Brazil. Those countries are moving from socialism to capitalism. And we've moved from capitalism to socialism. And like I said, we're in the world of George Orwell. I mean, just think of what would happen if they deregulated the labor markets. That 50% unemployment rate of youth would instantly drop in half, because those kids would come up and take those jobs and do those jobs for 20 or 30% less than, the crony capitalists. And everybody would be 20% richer because they'd get 20% more for less money. And, human behavior matters. And these people have legislated away all of the incentives to produce, whether it be through theft, through unsound money, or legislation, which I'll call it pulls up the ladder behind them. Gord, did you start at the top? I didn't start at the top. I started at the bottom rung of the ladder. I worked at Burger King. Okay, and I had a boy, I was a paper boy. I worked at Taco Bell. I didn't start off making $40 or $50 an hour. And that's how you get there. But the bottom lungs of the ladder, they pulled those up and no one gets to get on. And that's by outlawing capitalism, which is more for less.
Ty, we need to wrap up our series with nominal growth versus wealth creation.
Nominal growth is nothing more than illusion. It's nothing more than mainstream media and socialists taking information to people that have blind faith in their governments. And, Lenin used to call them useful idiots. And the public education system is designed to create clerks, not people that can think for themselves and learn from history. In fact, the teaching of history has virtually been ceased throughout the developed world. Just recently, the NEA is pushing to not cover any kind of history before 1910. Wasn't that interesting? In 1910, when the Fed was born? Huh. People that actually, I'm a product of public schools, but they used to be run by the Parent Teacher Association, and it was run by local parents. And the reason it was run by local parents is because if the teachers didn't teach their kids, the parents could reach across the table and grab them by the throat, which is a powerful, deterrent from being unaccountable. I mean, the whole thing is the whole world is unaccountable right now. And, we have these huge groups of people that believe they can have something for nothing. And wealth creation is defined only in one manner. It's producing more than you consume and creating savings, which creates capital for the future. We'll call it seed corn, seeds for next year's harvest, and creating cash flow, which can be used to build and accumulate wealth, whether it be in a personal household or at the national level. And of course, we have none of those things in the West now. Now we are a group of socialists. Okay, we have now the Ministry of Truth and Propaganda. It's put us in a position of no solution and only building on the things that have failed. And it's not an if, but when the crisis arrives. And it sets the stage for wrong outcomes of the coming crisis. I mean, as you know, Gord, there is going to be a market clearing event where the illusions that people operate under are going to be proven wrong, and they're going to be proven wrong and wrong and wrong until they finally become to the proper conclusion. And of course, we can harken back to Deng Xiaoping in China. And understand they were doing socialism and putting more socialism in and putting more socialism in, and the people were demanding it, and finally they said, well, we can't get to any answers here. And so out of desperation that everything they tried over and over and over again, finally they said, well, maybe we should put the incentives in here so that people can benefit from creating wealth. It's like a light going on. To get rich is glorious. Nobody has stopped China since, and no one's going to stop them. I mean, we can hate the Chinese government as Western media does, but I'm going to tell you, and of course they talk about all these dissidents and everything else, but those people in China, they don't like the government, but they don't care because their income is up 500%. And the Chinese government is focused on growth. Okay, they're focused on wealth creation. Okay, they're not focused on gathering power. Actually, they're focused on growth and not losing power, but it's a losing battle because as those people get wealthier, they demand more accountability. And that's just going to continue to grow. But wealth creation will never restart in America, not until that deadwood is cleared away. And the deadwood is so deep. I did a newsletter 2 or 3 editions ago, and it showed the period of Ronald Reagan. And, all of the Democrats hate him, but the rest of the public loves him because he literally cut regulations in this country by 30%. And by reducing taxes and cutting the impediments to growth, we grew for 20 years. Well, things don't last forever, and socialists don't recede forever. And they built those regulations up again and printed money and made promises they can't keep again. And we're now back to where we were before, but it's more of a geometric problem. And the people that created the problem are incapable of solving it. But there's just that's why they keep throwing the bums out, because they're desperate for real change, and all they do is get Tweedledee or Tweedledum. And these people are, I'll call it big government progressives, and they're on both sides of the aisle, and they're part of the system, part of the bureaucracy, part of the old boys network. And the old boys network is just going to try to perpetrate itself until, keep building itself until, it's doing what we're seeing now, which is a collapsing economy. Socialism has created collapses throughout history, and we're collapsing just like the Soviet Union did, and for the same reasons.
It's amazing, Ty, just how path that we're following right now is so similar to the reasons behind the collapse of the Soviet Union, or can I put the word centralized planning? How centralized planning doesn't work and only leads to greater and greater problems. Ty, we have to wrap. Many of the things that you were just discussing and in our recap here, I encourage our listeners to visit our Global Insights archives on my site and on Ty's site that have, I guess, Ty, close to 100 shows where we went through a lot of these discussions. And I think they're still very timely, where we talked about things from complexity in the governments of Dodd-Frank, what it was meaning from regulations. We get into discussions on Obamacare. We get into all sorts of these actions that we've seen unfold that continue to impede our ability to grow, and how have been papered over with false growth numbers that we've tried to lay out here in the last series, this particular series. We've got a roadmap of where we're going with the kinds of things that we want to talk about shown up here on this chart. Any comments you would like to make on some of the things we want to talk about in the future that you have in your mind?
Yeah, this isn't doom and gloom. This is the greatest opportunity in history. This is economies going through the seasons of spring, summer, fall, and winter. And the United States and the developed world is in fall, and they're about to go to winter. And we're entering that period, and it's a period of killing, and it's a period of destruction, but it sets the stage for the next leg of growth. Unfortunately, this is going to be the greatest debacle ever written about. It will be studied for hundreds of years. But if you use applied Austrian economics, which most people don't have a clue what that means, I talk to all sorts of, they go, just go buy gold and silver. And gold and silver is a way to preserve your wealth. There's no doubt about it. But they really haven't figured out the means that they need to do to apply it to investing and building wealth during these periods, because the greatest opportunities in history lie in front of us. I believe you're going to get the greatest buying opportunity in stocks in history. I believe you're going to get, the greatest. We're going to see the greatest transfer of wealth from those that hold it in paper to those that don't. And of course, that's the key to applied Austrianism. It's the indirect exchange by von Mises. And what does that mean, and how do you do it, and how do you put it? Because, Gord, would you say that before this is over, they're going to have to reconstitute every currency and financial system in the West?
Without question. The chart I have up right now shows you where I've, since 2009, have been suggesting where we're going here with a fiat currency collapse, which is a reconstitution of money where it's a store of value, where money is a proper exchange of value. And that means reconstituting what we call a money.
Sound money. Restoration of sound money. Restoration of having something that you can store wealth in and transfer purchasing power to the future.
Point I'd make, Ty, the misconception, and laid this out in Financial Repression, is right now people believe that money is wealth. In fact, it's not. It's a representation of wealth, but in fact, it's no longer a store of value. And that slight difference isn't to play games with words. It's, in fact, the sleight of hand that's happening right now to your retirement plans, your wealth that you think you have stored. It's a transfer right now that's going to pay government debt, but in the future, that through other means, it's going to be a much broader transfer of wealth, and you can protect yourself. You need to understand how to do it. It is simple once you understand it and you have a firm grasp of it, but it's not obvious until you study it, and it's certainly not something people are talking about in the mainstream media. A lot of us spend an awful lot of time on it, so I'll leave it at that. Ty, we have to wrap. It's been a pleasure having you for this series. I'm looking forward to the next one that we have. I have up your a graphic here. I was wondering if you could describe to our listeners, for those that might have missed the first couple sessions, how people could learn more about what you do, how to contact you, the services and products that you offer.
Well, I have a newsletter that's free. It's called TEDBits. You can sign up for it at tedbits.com. Tedbits.com is just rolling out right now, but it's really a site dedicated to truth and light. Although we do have paper boys in there, and those paper boys, we have to consider what their actions are. We can't live in a vacuum, and if the facts change, we have to be able to change our opinions. But I can't stress enough that this is the greatest opportunity in history, because as these illusions that have, I'll call it mushroomed like a nuclear cloud, are unwound, and people learn that they can't have something for nothing. Understand, the collapse is going to keep collapsing until the people that believe they can have something for nothing change their opinions and get off their butts and start producing more than they consume, just like the Chinese public does. And that's going to intrude on their cozy little relationships with welfare checks and food stamps, because those benefits are unpayable and inextinguishable. And so Mother Nature is going to keep providing the pain until people come to different conclusions, just like they did in the Great Depression. I mean, the Great Depression was a credit collapse, and this is going to be no different. This is going to, our fathers and mothers and grandfathers and grandmothers, they didn't want credit if their life depended on it. and we're going back there. And of course, that was a winter, and spring started once they rolled back the socialist policies, and of course, growth started again. And we're going to go through it. Unfortunately, this episode is geometrically bigger. And so challenges lie ahead. Most of the people, all of their core beliefs are going to be challenged and proven false until they come to different conclusions and decide they have to produce more than they consume, and that the people that do so are not to be preyed upon, but to be encouraged. The small entrepreneur, the small businessman, he has got to be able to go out and provide more goods and services for less money and knock off the crony capitalists and the governments. Because, crony capitalists and governments are both synonymous for the same thing. And that is less goods and services for more money. And we get to keep the difference.
Ty, it's been a pleasure. Looking forward to next month. Until then, take care.
Thank you for having me.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.